Hello, my dear students. Welcome to today's video on investment management. Till now, you have seen my videos on financial accounting. From now onwards, you can also see my investment management subject videos. I'm Dr. Bharathi Sunil. Welcome to today's video on investment management subject. This investment management subject is there for BCom, BBA, MCom, MBA, CA, and other professional courses. And also it is useful for those who are doing certification courses in NISM, NPTEL, or Coursera, etc. Our today's topic is what is investment, why should we invest, and where can we invest? Have you ever wondered how to make your money work for you instead of just working for money? Whether you dream of owning a home, traveling the world, or securing your future. So, first, understand investment. What investment really means, why it is essential, and where you can start your investment journey. What is investment? Just think investment as planting a seed today. If you plant a seed today, you can enjoy the fruits in the future. Let's go into the topic. Investment. What is investment? Investment is the commitment of our current funds, what we are investing by anticipating more inflows in the future. And whatever the amount we are investing and what we are receiving, the difference is called our income. Why investor want to make investment? He want to generate more income in the future. So an investor hopes to be compensated for first one, foregoing present consumption. So for example, a person is earning 1 lakh rupees per month, right? So out of that 1 lakh rupees, if he is spending 80,000 for his needs and whatever is remaining, that is 20,000, if he wants to make saving. So what he is doing, instead of spending this money for any other purposes, he is saving that money for the future. Means he is foregoing his present consumption. And for the effects of inflation. What is inflation? Inflation means our purchasing power will be decreasing. Say for example, today if you can buy one plate idli for 40 rupees, after 2 years, the same idli we have to purchase for 60 rupees because whatever the value of 40 rupees, that is equal to 60 rupees after 2 years. Means the rupee value will be decreasing. So because of this inflation also, investor want to make investment to earn more amount in the future with his investment. Next, he is taking risk because he is not holding that money with him and he is making investment. So because of that risk, also he wants to earn income. In the second definition, it is mentioned that whatever the funds we are investing now in the form of financial or marketable or physical form, that we can earn with more amount in the future. What is investment? Means putting all our savings into some asset so that it will grow and it will give us good money in the future. So here I would like to give some examples of investments what are available for us to make investment. First one, bank deposits. What is bank deposit? Whatever we are investing in bank in the form of savings account or fixed deposits account or recurring deposit account, on that you will earn good amount of interest. Say for example, if you are investing in fixed deposit, if you have invested 50,000 today for 6% interest, after 1 year, you will get your 50,000 rupees along with 6% interest for 1 year. What is the next option for us? Buying gold. Say you are having 1 lakh rupees with you. If you go to one gold shop, if you sell that gold in future, definitely the prices are increasing for gold. So whatever the increase in price is there for gold, that will be your profit. Next, buying shares or bonds. If you buy shares, say for example, if you are buying share in Reliance company, means you are holding some part of their capital in the form of shares. So for whatever the shares we are buying, if the company is making profits, we'll receive dividend. So our investment plus will receive dividend on our investments. Next, bonds. Bonds means we will invest certain amount for fixed period of years. So that particular institution which is giving us bonds, they will also give interest for that particular period of investment. Say we have invested for 5 years, 50,000 rupees for 10% interest. So at the end of the 5th year, we will receive 50,000 rupees with interest for 5 years. Next, buying properties. Why we buy property? Because if you buy property, you can give that property for rental purpose. Suppose if you are buying one building, you will give that building for rental purpose. You will get rent on that. Or say you have purchased one land. And if you are doing cultivation, you will be owning that land, and also you will get returns from the cultivation of land by growing crops. So whatever the appreciation is there in buying this property, that is called our profit. Next is starting a business. If you are having some money with you and if you want to start one business, whatever the business investment is made by you is called capital. And if the business got success, then you will earn good amount of profit. Next, mutual funds. What is mutual fund? Say if you are having small savings, you can invest in mutual fund, and whatever the savings you are making, like you, many people are also investing. So all the amount will be pooled into one fund, and that amount will be invested in different companies in different financial instruments, means like shares, bonds, debentures, preference shares, etc. And on that mutual fund, you will get dividends. Next, buying art. Say, for example, if you are purchasing one nice painting or any antique pieces with the hope that their value will increase in the future. Say, you have purchased for 10,000 rupees and the value got increased when you sold that particular antique piece. Whatever the increase in the value, that will be your profit. Next, education. Education is also investment. Why? Because because now the fees amounts are very high. So whatever the amount you are spending on your education to acquire good skills, if you are using that skills for your future, definitely you will get a good job and you can earn very good amount of income. Till now what we have discussed, what is investment, we have discussed about meaning of investment, definition of investment, examples of investment. Now we are coming to the second topic. Why should we invest? Because investments are for our financial security. And investments will be useful for achieving our long-term goals. That is why we make investment. So here we will discuss about the reasons why we make investment. First one, to grow our wealth. Say, for example, you are having some savings with you, and if you are not investing these savings in any form of investment, that amount will be idle, right? So instead of keeping that amount idle, what you will do if you invest in stock market or in mutual funds or in real estate, definitely will get return, right? So investments will give us returns. So this will grow our wealth. Here one example is given. If I am investing 10,000 rupees at 10% annual return, it will become 25,937 rupees in 10 years. Suppose if I have not invested is 10,000, the 10,000 will be only 10,000 after 10 years also. But you all know that because of inflation, the 10,000 will not have the same value after 10 years. So what is the wise choice? Invest this 10,000 today and get 25,937 rupees after 10 years. Second, to beat inflation. Just now we have discussed because the value of rupee will decrease year by year. So inflation reduces your money's purchasing power. So say for example, if you want to buy 10 grams of gold today, it is around 90,000 to 1 lakh rupees. Suppose if you bought this gold 5 years back, it was around 60,000. So how much it got increased? 40,000 rupees. So what you bought for 60,000 5 years back, the same gold you are purchasing for 1 lakh rupees now, right? So You have to understand here that if you are making investments, our wealth will definitely increase. Here you can see the example. If inflation is 6%, your savings earn only 4%. And whatever you are earning the other 2%, that is loss because rupee value is decreasing. So it's better instead of keeping that money idle, if you make investment, at least you can earn 4% on every 100 rupees. Next, third one is to achieve financial goals. Say, for example, every person will have their financial goal, like buying nice car or buying house, or after marriage, that person wants to give good education to his children, or if he wants to have any travel plans to abroad, or if he wants to have retirement fund after his retirement. For all these purposes, we'll make investment, right? So whatever the investments we are making, everybody's investment is tailor made. Means, say, for example, at my age, what is the requirement for me? Retirement corpus. Suppose if you are a 20 years old person, you will make investment for buying a nice car or bike, right? Say, for example, if 35 years person is investing, means he wants to buy a nice house or he wants to invest for his children's education, right? So like this, age wise, our financial goals also will change. So whatever is the financial goal, we have, what is the ultimate need? We have to make investments. And what is the other reason? And what is the fourth reason for making investment? To generate passive income. Say you are a regular salaried person. You are having regular income with your salary, but still you want to have some side income. So what you will do, you will buy one building or flat and you will give that for rental purpose. So every month you will receive rent, no? That rent is your passive income, right? In the same way, I'm having 10 lakhs with me. So what I will do, I will invest this 10 lakhs in mutual funds so that I will get returns after 1 year. Like this, we'll make investments for our passive income other than our salaried income. Next, for financial independence. So to have our sustainable lifestyle, and everybody wants to have a peace of mind. Why? Because if you are having financial security, we'll be very happy because it will not affect our lifestyle. So it is always good for us to make investment to have financial independence. So till now, what we have discussed what is investment and why we have to make investment. Now we'll be discussing about where can we invest. We can invest our money depending on our interests and goals in three types of assets. What are those three types of assets? Financial assets, physical assets, and marketable assets. Now we'll discuss in detail about all these assets. First one, financial assets. What are financial assets? These are the investments which we are making and we can see only digitally or on paper. Say, for example, if I'm having mutual funds or I'm having some investments in shares, I can see my investments in my Grow app, how much of money I have invested and how much dividend I am getting or how much increase is there in my price of share. Okay, all the details I can check digitally or I can also have on paper. Financial assets are also called non-physical assets. We can get our rights or our ownership claims when we make investment. And whenever we want to convert that into cash, we can convert that into cash by selling. What are the examples of financial assets? Stocks, bonds, cash, mutual funds, and bank deposits. Where they come from? Where the financial assets come from? Financial assets are created when individuals, companies, or governments need to raise money by way of issuing financial instruments like stocks, bonds, or bank deposits. So, from where we can get these financial assets? When individuals or companies or governments, when they want to raise money, they will issue some financial instruments like stocks, bonds, or bank deposits. So who will buy these? Investors will buy these assets by providing these funds to whom? To the issuer of financial instruments. In exchange, what they will get? They will get claim on future payments, or they will get ownership rights. Say I have bought some shares in Tata company. Okay. So whatever I have invested, that money is my investment for future. That is true. And also I will get ownership rights in Tata company. And how they are acquired, and how financial assets are acquired. So how we'll acquire those financial assets? If you're having some savings, we'll invest. If you're not having savings, what we'll do? We'll borrow from banks. Okay. Or we will take some loans. By using all these means of funds, what we will do? We will invest in financial assets. So how can we invest? With our savings or from our loans, we can invest in financial assets. So where these financial assets are traded, these financial assets are traded in financial markets. If you want to buy shares, we can buy in financial market. If you want to sell shares, we can sell in the financial market. So where we can buy and sell? We can buy and sell through stock exchange or through some banks or brokers. Next is second form of investment is called physical assets. What are physical assets which we can see, we can touch? See, for example, I bought one laptop, that is my asset. I bought one building, that is my asset. I bought one cell phone, that is my asset. Means which we can see, which we can touch. Here some examples are given. Real estate. Say we have bought houses or apartments, that are our physical assets. Gold and silver. Or we are buying diamonds also, that is also called investment in jewelry. So if you are making investment in gold, silver, or any precious metals like diamonds, platinum, that is also called investment in physical asset. Next, arts and collectibles. Say, for example, if you are buying nice paintings or any antique pieces or any rare coins or stamps, that is also called investment in physical asset. Next, machinery and equipment. If you are buying vehicles, say if you are owning bike or car, or if you are purchasing any machineries for your business, all these are called what? Physical assets. So, from where these physical assets come from? So if you want to buy, from where we have to buy? These physical assets are tangible items which we can see, right? So they are produced or constructed or extracted. Say for example, what are produced? Say for example, uh, machinery. This is produced, right? What is constructed? Buildings are constructed. Extracted. How we'll extract gold from mines, right? So we can buy physical assets or tangible assets either from production or construction or extraction. What are the examples for that? Land, buildings, machinery, gold, and other commodities. How can we acquire those physical assets? So if you want to buy physical assets, how can we buy? Individuals and business people, they can buy physical assets directly from sellers who are selling those assets. Say for example, if you want to buy gold, you will go to gold shop and you will buy gold. Suppose if you want to buy flats, you will go to developers of land and you will buy plots or flats, right? If you want to buy one car, you will go to car showroom and you will buy car. Understood? And companies may use profits or retained earnings. What are retained earnings? Say, for example, if the company is making 10 lakhs rupees of profit, out of 10 lakhs rupees of profit, they have distributed as dividends 7 lakhs rupees. So, how much is remaining? 3 lakhs. So, this 3 lakhs is called what? Retained earning. So, companies can use these retained earnings or profits or loans or whatever the capital they have raised from investors, they will use all these amounts to buy any physical asset. So what you can understand here, individuals can buy with their own savings, or they will buy assets by taking loans from banks. And the companies can buy through their profits or retained earnings or loans or whatever the capital they are raising from investors. Using these amounts, they can also buy physical assets. Next, third one, marketable assets. What are marketable assets? The assets which can be quickly and easily convertible into cash. Say, for example, I am having mutual funds or I am having shares. I'm in need of money. So, what I can do, I can sell those shares or mutual funds in the financial market and convert that into cash quickly, means within very short duration. So marketable assets means which we can quickly or easily convert into cash in the financial markets. What are the examples given here? Purchasing shares of a company or buying government or corporate bonds or investing in mutual funds or ETFs or commercial papers. So from where these marketable assets come from? Say, for example, a company called ITC. ITC is issuing shares to the public. So I have also purchased shares from ITC. But when I want to sell these shares, I can sell these shares only through trading. That means stock market, right? So who are purchasing for the first time, they will purchase from the company. So for example, I purchase from ITC. And now I want to sell these shares. So if I want to sell these shares, how can I sell? I can sell in the stock market. Say, for example, some XYZ also is interested in buying this ITC shares. Now they can buy in stock market, right? So shares will come from company when it is first issued, and later you can get those shares from stock market. When the company first time issued shares, it is called primary market or new issue market. But later, when the shares are bought and sold by investors, it is called secondary market or stock exchange. How they are acquired? So how investors will acquire these shares? Say if I want to acquire those shares, how will I acquire? I will use my savings and I will buy shares, or I will take some bank loan, I will buy shares, and later if I get good profit, I will sell those shares, right? So where I can sell these shares? In stock exchanges. And also the mutual funds, whatever I'm purchasing in units, that also I can sell only through mutual fund platforms. That means financial market. Here I will explain you various types of investments with their features, risks, and potential returns. So first we'll take equities. Equities are also called stocks. So when we buy shares in a company, means we are owning some part of company's capital, right? Stocks can offer high returns, but also it is having high risk. So what are the examples for shares? Shares issued by NTPC or ITC or Reliance or Infosys, Wipro, and also mutual funds, equity mutual funds. So second one is fixed income securities are also called bonds. So bonds means what? Here we are lending money to governments or companies who are coming with bonds by offering regular interest payments, and these are very less risky too compared to stocks. So examples of bonds are government bonds, corporate bonds, and fixed deposits. Next, cash and cash equivalents. These are very safe but short-term investments. That is why we can easily convert into cash, but also they provide less returns. And also we can expect less returns from that. Example, saving accounts, treasury bills, money market funds. This I will explain you when I explain you money market instruments. Real estate. If you are investing money in physical property, we will get appreciation in the land value and also regular rent, right? So what are the examples? Houses, apartments, land, commercial buildings, IITs. Next, commodities. If you're investing in physical goods that are traded in markets, example, if you are investing in agricultural products, generally, agricultural produce, example, rice, will purchase in December month. At that time, we'll get at a lesser price, and later the prices will increase. So what we all do, we'll buy in the month of December itself, and we'll use this after 5 months or 6 months. In the same way, gold, silver, oil, okay, all these products we'll buy in anticipation of rise in prices in future. Next, alternative investments. These options don't fit into main categories because they have higher risk. Example, private equity or hedging our funds or cryptocurrencies, etc. Some key points I want to discuss here. Stocks are best for long-term growth, but having a lot of risk also, because sometimes markets will be going high, sometimes market will be going down. So we have to expect that swinging also. Stocks are best for long-term growth. Why? Because though the market is having uptrend and downtrend, still, if you are investing for long term, definitely stocks are very good for investment. Next, bonds are definitely stable. Why? Because if you are risk averse, go for bonds, because the bonds are more stable and will get regular income. Next, cash equivalents means which are very much easy to convert. It's always safe for you because you can get money whenever you want, though it is providing you lesser amount of return. Next, real estate. Real estate, it is very good investment. Why? Because you will get appreciation of land, that is profit for you, and also regular income. Why? Because if you give that for rental purpose, you will get rent also. So you are having both regular income you have and also growth. But what is the difficult part is it is very difficult for us to sell if you want money immediately. Next, commodities. Commodities, now we have discussed gold, no? So as the time passes, the prices of these products also definitely increases. So it's better to purchase commodities now to enjoy profits in future, because definitely inflation, because of inflation, we cannot get the same price in the future. Next, alternative investments offer good returns, higher returns we can expect, but lesser liquid, and it carries higher risk. We have discussed financial assets, physical assets, and marketable assets. We can't say very surely that you invest in this, you will definitely get profit. So it is always better for you to diversify your investments. Means don't invest all your money into only one. It is always better for you to diversify. Some amount you invest in stocks, some amount you invest in bonds, some amount you invest in land, some amount you invest in commodities. Like that, you diversify your investment. So if you diversify investment, that means you are balancing both your return and risk. This is called portfolio management. So I would like to give some tips for first-time investors. So first, you set clear goals. Means for what purpose you want to make this investment. Whether you want to buy car, or you want to buy one flat, or if you want to go for foreign tour, or you want to go for retirement plans. So first, clearly set your goals, and based on that you make investment. Second tip is start small, because don't wait that I will get some money in the future. Till I get that money, I can't make investment. So whatever the amount you are having now, don't wait for the big amount. Whatever the amount you are having now, you make investment now. And always remember that you should have consistency in your investments. So to begin with, though you are having less money, you start investing, and but you should maintain consistency in investments. Next, diversify. What I have said just now. Don't put all your money into only one place. spread among different assets like gold, land, mutual funds, stocks, bonds, etc. And be patient because wealth creation always takes time. So don't be impatient, stay focused and don't get panic and don't be panic because market always swings. So you can't expect what is there today, the same will be there for tomorrow. So market always swings. So don't get panic and stay focused and have a lot of patience. Definitely you can. Remember, investment is not just for only wealthy or financial experts. It's for everyone. The earlier you start, the most benefit you will get because of the power of compounding. So set your goals, start small, and let your money works for you. That's all for today, but learning never stops. Thanks for watching. If you found this video useful, don't forget to like, share, and subscribe this video. I'll come with more videos by giving you more insights on managing your money smartly. Thank you.